Hello and a warm welcome to this analysis. Now, today's analysis is on the gold ETF, on gold Comex and gold MCX. And prior to this, I had covered silver ETF and Hang Seng ETF also. You can check them out if you missed them. They are there in the description box. Now, before I get into the gold ETF, the one I've covered today is gold bees by Nippon India, but you could select any of the gold bees you prefer to your liking. But before I get into gold bees, we must understand what gold Comex is doing, what gold futures in the MCX is doing in India, and I've also covered today the gold silver relative strength and how it's going from here. So starting with the MCX gold, now this is a quarterly chart, and you can see in the quarterly chart from whatever data Tradingview has we've got that it tends to make these giant round bottoms, and then move. The first one is 1980 to 2020 year dip, and then the breakout happening out here. So it's clearly a lengthy period of that. Now again, look at the next one, which is more is clearly visible in the monthly, is this one from September 2011 all the way to August 20. This entire rounding bottom structure from where we had, post pandemic till the Ukraine crisis. In fact, in the Ukraine crisis, we saw a small dip, and then that sharp move that's led due to the inflation which we see globally, which has spiked this crazy kind of move out here in gold. Now, as per Ichimoku, everything set up for it's a totally bullish setup. There's nothing in the monthly which I would call bearish at all out here in this rounding pot top breakout. Now, as per Fibonacci, this rounding top which I'm talking about from the 10-year huge gap which we saw, and then the breakout has done its minimum 1x Fibonacci out here at 2725. It can definitely do a lot more towards 3175, 3775, because huge breakout. But will it do a pullback? Let's try to understand that also. Let's look at the weekly chart out here. In the weekly also, the Ichimoku perfectly placed. In fact, today we've had a very very sharp move in gold. You can see, yesterday and today, that's an extremely sharp move out here. Even in the daily, the Ichimoku setup still strong. Was this a sideways move from October 24 till December 24, or was is this still a part of a correction? Because sometimes we have corrections which are like, first leg down like this, then the pullback is something tends to be like this, and then we see another round of correction. Is it something like that? So let's analyze that. Before that, let's me look at the 4 hourly chart. The 4 hourly chart is also pretty strong right now, steaming away in full strength out here. Now let's come back to the daily, and want to just switch off Ichimoku for a second. In the daily, there is a possibility of a bearish harmonic ABCD happening out here. So it's right at the PRZ of a bearish harmonic ABCD. There is no reversal confirmation yet. That would come from the 4 hourly chart. We'll be looking for a dip below this green candle, this doji. If it starts sustaining below 274840, right now at 58, so then we would say yes, there is a potential of a pullback happening, or a the this second leg of the correction, if there is in the market. That's one of the levels. This could stretch quite a bit, if it will only get into a failure mode above 2775. Till then, it's active. But for now, I would suggest that if one is to look for bearishness in gold, it's only below 2745 on a 4 hourly chart. Now, if it starts pushing its way above this level also currently, then the next bearish harmonic pattern is coming all the way at, it's a bearish butterfly which would come much higher, around 2 850. It's a healthy $100 per ounce kind of move we are looking at. So keep your eye till 2775, 2745 in the Comex, and based on that, one could take a chance of whether it pushes up, not. Of course, it's not necessary that this pattern will also work on a reversal. If it continues to rally, that is the if there is was a correction which ended out here itself, then the let's look at what the upside looks like for gold. We go to the weekly charts, and here we can see there's huge potential because of that massive rounding bottom breakout which is there after 10 years. So potential tremendous for the upside still there. Of course, it's not necessary that all rallies go one way, but interestingly, gold in the weekly has not violated the Ichimoku baseline since it stood this breakout out here in November 23. So that's never happened, and it continues to push its way up, all the way up. You can see the push happening out here. So any major correction, whether it's there or not, or whether it will be a pullback below 27540, would probably get pulled back, around 2600 odd dollars, like that. The bigger correction, if it were to take place for this rally which started in October 23, there's a 38% retracement at 24.23, but that's asking for too much currently. One should be looking at level wise. So let 2750 break, then we will be looking for pullbacks in the thing towards 2650, and lower towards 2550, and so on. But right now, no. Now the other aspect of why gold is so strong is because of the new US presidency of Trump, where he's talking about tariffs imposed on the what you call on China and other countries. So if there is a increase in tariff to Chinese imports into the US, that would mean that the yuan will be depreciated, and which would also lead to INR depreciation and other currencies depreciation. And once currencies depreciate and there is a tariff war, it leads to further what do you call raising up of gold, because gold is the answer to all inflation. So an inflation would not be in control if things like that were to happen. One has to keep those aspects in mind for gold. Now let's have a look at MCX futures. MCX futures, from whatever data we have from 2016, is fantastic. Beauty of a rally. Already, if you see the first move from 2015 to 2020, that 5-year move led to already 1x at 80,000. Now, a part of this last spike that we see in gold in India is also due to the fact of the weakening of the Indian rupee, because our gold prices are impacted by the for international price into the dollar rupee conversion plus the duty structure out here. Again, the Fibonacci is quite strong near this resistance of 80, 82,000, then moves up further like this in line. In fact, if the rupee gets weaker and gold gets stronger, you can see the MCX gold could do much better than that. Now again, in the daily, in case, now again, because if we are going to consider this as a sideways, a running correction which ended in December, then there's a huge possibility of upside. But in case, like I said, if we are looking at something to that this is just the first leg of the this is just a pullback, we could see something like this. If that is to happen, let's analyze that. The matching of the 38 to 50%, that's a deeper correction which we saw, which I spoke about. Gold is much lower, not necessarily it will go to there. First, let's calculate whether do we have any harmonic patterns available in the MCX gold compared to the Comex gold. Now there is a bearish ABCD here also, but it's quite far. It's quite far, yet nowhere close to it. It's around 81,300. Now, this disparity with MCX is, like I said, is because of the rupee depreciation, which has caused it to happen out here. So it may not, if it turns from the current Comex gold reversal, then this might not happen. If it continues, one can keep an eye on 81,350 where this bearish harmonic is. And if it continues to further push its way up, international gold keeps on rising, then the bearish harmonic is a deep crab. In this case, not a butterfly, is quite high right now at 83,900 odd levels. Again, it is not necessary that gold would stop at those levels, not necessary. It could push its way further up, like the way we saw in the international gold things. In case there is a pullback now itself in gold, in the international, and here also if the rupee remains stable, then also in the 4 hourly charts of mcx gold, we have a bearish divergence kind of being formed, not yet activated. For its activation, we would like to see a further dip down, say towards 79,300. That would then accelerate some kind of a pull down to 78 or to 78 200 in that sense. So in both cases, in the case of the international gold, we have a bearish ABCD, while in the case of the India gold, in the 4 hourly, we have a bearish divergence forming, not yet ripe. So they would be giving some triggers to pull us down. One can look at it from that way. Otherwise, as per Ichimoku, in all time frames right now, it is very strong with no pullback. Not even, I can't see even a pullback happening in a lower time frame. Even in the hourly, there's a good slant. So there's no apparent panic or weakness happening in gold here. Now let's have a look at the gold silver ratio chart. Now this is the monthly. You can see clearly it's been a lot of volatility. One time silver taking up, then gold rip or bouncing back like this. It's more apparently clear in the weekly that you can see from May 24, the rise of inflation out of control, pullback, rate cuts, again a rally pushing it up. Now this is based on Comex gold silver, not on the MCX gold and silver pricing. And here you can see it's at a edge out here, the edge of further strength in this zone possible. It's more clear in the 4 hourly chart. You can see the 4 hourly ratio chart, kind of a triangle right now between gold and silver above 90.15 right now at 89.5. This would mean that gold will continue to dominate over silver and could give you a much better move on the upside, and while on the downside gold would correct less, silver could correct more based on the ratio chart currently. Else, if it fails to take out this, we might see one more dip down in within this triangle for the gold silver ratio. Now look at the I'm looking at gold bees, which is Nippon India. You could select any of them as you like. You can see first rally 2007 to 2012, then a deep correction, sideways correction till 18 odd, and then a good move. Money has gone up almost 4 times from 20 to 70, 80, a little bit here there, pushing its way up again. You this is the level from the pandemic till Ukraine, is a massive sideways move between 50 to 37. This is the era where even equities were a bit volatile, from even in our markets from September October 21 till March 23. We had more of a sideways trend, so even gold was not doing too much, and then we have a very strong breakout in gold again. Out here there is not much to do. One could keep an eye on the gold valuations of in India and trade accordingly. If there is a very deep correction, that would bring it back to 56. Else we just mirror this image and we try to look for further upside in the case of the ETF also, which is also a case of a deep crab. In all conditions, whether if it's trading or no, for investing, gold is something which has got potential for a huge upside. One should continue to do SIPs in gold bonds or gold ETFs like that, because it's a safe haven. It's something less riskier, and you also don't have to put everything in equity. It can help you in cases of inflation, and otherwise also a very solid investment alternate is there in front of you in that case. I hope this video is of help to you. So please do like this video, share it, and do follow me for regular ideas on stocks, indexes, and ETFs. Until then, happy investing.